The tax code is designed to benefit certain people more than others. Why? Because the tax code has three general categories of income. It has earned income, it has portfolio income, and then it has passive income. Your earned income is the money you make from your job. Your portfolio income is the money you make from something like your stock market investments. And then your passive income is your income that you would get from something like a rental property. And do you know which type of income has the highest tax rates and the lowest amount of tax write-offs and the lowest amount of tax deductions? I kind of gave it away, but that is your earned income, the money you make from your job. Just take a look. In this Coca-Cola example, the workers making $30,000 to $180,000 a year are going to be paying somewhere between 15 to 30% in taxes, depending on how much money you make and where you live. The CEO, who's making millions of dollars a year, is going to be paying somewhere between 39 to 52% of his money in taxes, again, depending on where you live when you earn that much money. But when you are the owner and you're making this money just from owning the company, not from working in the company, well, now Warren Buffett's top tax rate was 20% because he made this money from his investments, not from his labor. Now, yeah, there can be sometimes a small investment premium tax, a few percent, but in general, your top tax rate is 20% when you make your money from an investment that you own, rather than something that you're working for, rather than something that you're trading, rather than something that you're flipping. When you own money from an investment, you can pay less money in taxes while earning more money. This is the first thing that you have to understand if you want to be able to win in this economic system, which is you don't just want to get paid from your labor, you have to get paid from your capital as well, because number one, it's going to allow you to earn more money, and number two, it's going to allow you to take advantage of the tax code that we have here in the United States. And I can tell you this as an attorney who's not your attorney, but our tax code benefits the investor, our tax code benefits the business owner. And if you live in the United States, you need to be a business owner. Now, this doesn't mean you need to go out and operate a business. This does not mean you need to go out and start a business. In fact, most people should not be in the business of trying to operate or start or manage a company. But you can still own a business without having to work in trying to manage and operate the business by owning a piece of it. That means deploying your capital, putting your money to work, that we own a piece of the business. This brings us to the second thing that you need to understand, which is how do you earn money the right way? Now, if you went to school, you got a good degree, you got a good job, and you're happy with the income that you're getting, then fine. No big deal. If you're making enough money to live your life financially, if you're making enough money to put money away for your investments, if you're making enough money to put money away from your retirement and your wealth and your vacations, and you're comfortable with how much money you're making, then this part does not apply to you. But if you are not happy with how much money you're making, either because you're not living the lifestyle that you want, or because you don't have enough money to invest, you don't have enough money to save, you're going to have to work on your money. Now, the first thing that I always say, before you just go and try to earn more money, is you got to get your money right in the first place. That means you have to be able to live below your means no matter how much money you're making, whether it's $20,000 a year or $200,000 a year or $2 million a year. You have to know how to strategically use your money, because if you don't, statistically, what we've seen here in the United States is as people make more money, you dig yourself into a deeper financial hole, because now as you make more money, you become a bigger line of credit, a bigger investment for the bank, because when they see you make a lot of money, they're going to be willing to give you more money. I was recently at a conference and I met a couple people actually who had these big exits in their companies. One guy, he sold his company for a few $100 million. And he owned pretty much the entire company. So his bank account literally had hundreds of millions of dollars sitting there. And he knew how to make his money, but the problem with him was he didn't know how to keep his money or grow his money. And so what happened? He got approached by a lot of very expensive financial managers. He got approached by a lot of banks telling him that he needed to go into debt, he needed to go into margin and invest his money. So the banks worked with the financial managers now to take this money that he had and deploy it in a lot of different places with the help of debt, with the help of margin. And this was just before the 2008 crash. So what happened? Well, he started buying real estate. He started buying stocks because he wanted to leverage up his investments. Again, he was a very good entrepreneur, but he did not know how to manage and invest his money. That wasn't his skill set. So he just went out to people who he thought were educated and smart in that field, and he lost a huge portion of this new wealth that he had built. Now, he was able to grow it again because he was able to build more businesses. He knew that skill set, but he learned a very painful lesson, that you have to know how to use your money smartly. And that doesn't just mean how to invest your money smartly, but you have to start with how to spend your money smartly, because the world is in the business of trying to get you to open up your wallet and give them your money. Period. Every business is in the business of trying to sell you stuff. Every salesperson is in the business of trying to get you to buy more. Every insurance person is in the business of trying to get you to buy something. Every bank is in the business of trying to get you to lend and borrow money. That's how these businesses make money. Does that make them evil? No. That's how these businesses work. So what you need to do is have that financial education of being able to put up a shield and understand, okay, these people, the rest of the world want my money. Fine. I have the ability to spend money, and I also have the control of where I deploy my money. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.